joined us across the country. We had over 450 individuals pre-register, and registrations were still coming in just minutes before we began this afternoon. I'm gratified to see from the reservation list we have very diverse participation from across the disability community. We have people from multiple banks and financial institutions. We have representatives of the 3 bank regulators, FDIC, OCC, and the Federal Reserve. We really very gratifying to see the level of interest in our inaugural webinar for the Center for Disability Inclusive Community Development. Let me take you to the agenda, but before I even do that, I'm going to turn it over to Elizabeth just for some housekeeping items.
Good afternoon, everyone. The audio for today's meeting can be accessed using computer audio or by calling in by phone. If you select computer audio, please make sure your speakers are turned on or your headphones are plugged in. If you do not have sound capabilities on your computer or prefer to listen by phone, please dial 1-929-205-6099. You will be asked for a meeting code. It's 690-345-881. Real-time captioning is provided during this webinar. The captions can be found by clicking on the CC button in your Zoom controls at the bottom of the screen. If you do not see the captions after clicking the button, please alert the host via the chat box. You may also view captions in your browser at http://www.streamtext.net/event=NDI. We hope you will take the opportunity to submit questions to us today. You can do so by using the Q&A box to submit any questions you have during the webinar, and we will direct them accordingly. If your question is not answered during today's webinar, or you are listening by phone and are not logged in, you can email us at hprice@ndi-inc.org. Finally, if you experience any technical difficulties during the webinar, please use the chat box to send a message to the NDI host, or you may email Katie Achenbach at KAUCHENBACH@ndi-inc.org. This webinar is being recorded, and the materials will be placed on the National Disability Institute website for your review in the future. Thank you. I'll send it back to you, Michael Morris.
Okay, thank you, Elizabeth. Let's turn to the agenda. We have a lot to cover. We're going to begin with many of you who represent the disability community, an overview and an orientation to the CRA, Community Reinvestment Act, understanding the basics. We'll then turn to really some of the research we've been doing on the relationship of low and moderate income populations and neighborhoods to LMI people with disabilities. And then we'll turn to item number 3, we'll turn to Mark and an orientation to the new center and some of the proposed future activities during the remainder of this year. I'm then going to turn to Janet Hamer, who is the board president of National Disability Institute and for many, many years was with the Federal Reserve Bank in Atlanta, to provide some examples of inclusive community development. We then will have time for some pre-prepared questions for all of our speakers and presenters. and we will also be watching the chat box. We'll also be watching the chat box for some additional questions for our panelists. So with that orientation, let me take it right to Tom Stokes, the Regional Manager for Community Affairs, the Atlanta Region, Division of Depositor and Consumer Protection with the Federal Deposit Insurance Corporation.
Please, next slide, please.
Tom, can you hear me?
Yes, I can hear you, Michael.
Okay, let me turn the floor over to you.
Okay, thanks. So let's begin first with the Community Reinvestment Act itself. I'll give a quick summary of it. The Community Reinvestment Act, CRA, was enacted in 1977, some 42 years ago, to encourage regulated financial institutions to help meet the credit needs of the communities in which they operate, including low and moderate income neighborhoods, consistent with safe and sound banking operations. So who are the banking regulators for CRA? There are three. The Federal Deposit Insurance Corporation, which regulates the non-Federal Reserve member state-chartered banks. The Federal Reserve Bank, which regulates state-chartered member banks and also bank holding companies. Just think of that as the parent company. Office of the Comptroller of the Currency, which regulates nationally chartered banks. Now, credit unions are not included in this, and other non-bank financial providers as well. So what are the roles of these agencies in looking over CRA? To encourage institutions to help meet the credit needs of the local communities in which they operate. They take into consideration CRA records into account when evaluating corporate applications for other business purposes. And that could be anywhere from opening new offices to merging branches or acquiring other banks. It could be restructuring. It could also be converting from state chartered to a national charter. And all of these are looked through the lens of how the bank is effectively addressing CRA. So what are the key elements of CRA? The CRA assessment area, and it's the first thing that's listed on the slide. It's an assessment area that is geographic in nature. It defines the market area for CRA purposes. And the important thing to remember is that a bank's CRA rating is based primarily on activities that benefit its assessment areas. Next, there's the responsiveness of the way that the bank addresses it. Banks are being evaluated on their community development activities that are also evaluated on how responsive those activities are to the needs of their community. There is also a basic premise that much of CRA focuses on activities that benefit persons or geographic areas that are considered to be low or moderate income. Financial institutions are encouraged to provide deposit and credit services to persons in areas that have traditionally been underserved. And then finally, there's an issue of what is called performance context. Now, this is looked at by the bank regulators in terms of how we go in and look at the quality of what the bank is doing in CRA community development activities. This performance context considers factors that are data-driven, such as economic and competitive environments, the demand and opportunity to lend and provide other services, the institution's financial capacity, and it's done in order to conduct a fair evaluation of the institution's performance towards CRA. In order to determine the needs and gather information about the community, examiners will conduct community contacts with local groups and with local leaders. This is one way in which a community organization can contribute to the CRA evaluation process. So we're going to the next slide, which actually talks a little bit about the assessment areas. The banks define their assessment areas, which are areas in which CRA performance is evaluated. It has to include geographies, and that's typically done by Census Tracts, in which the bank has its main offices, branches, deposit-taking apparatus, such as automatic teller machines, and then the surrounding areas where the bank has originated or maybe purchased a substantial portion of its loans. One of the things that must be done is they have to actually generate their assessment area from whole geographies. That is, you can't subdivide or break it up for matters of convenience. Those census tracts have to be whole. Next slide. The low and moderate income is a key factor. This is a group that we need to kind of target and focus on because the law includes them as the major receiving group for the benefits of CRA. Low income is usually individuals or tracts that are less than 50% of the median family income for the area. Moderate is an individual income or tract that is less than 50% and less than 80% of the median family income. And then you also have middle and upper income, and there is a small area of CRA that covers that, but primarily looks at low income and moderate income. Next slide on community development. The bank activities must have a primary purpose of community development to receive CRA credit. The primary purpose means that the majority of the activity dollars or beneficiaries of the activity are related to the community development purpose. So in quite general terms, what we're saying is there has to be an overall impact. It can't be indirect. It can't be short-term in effect. It has to be driven by the community development purpose. A bank activity is considered as community development as its primary purpose when it's designated for the following types of purposes: affordable housing for LMI, community services that are targeted to those persons, and this could be anywhere from the scope of educational to health, child care, social services, anything that fits that service regimen. Economic development and small business, and this has to be in the context of supporting permanent or long-term job creation and stabilization. Revitalization and stabilization of certain geographies, and these are low and moderate income geographies, rural distressed or underserved areas, and then also disaster areas. Next slide. These types of community development activities they can be community loans, community development loans, community development investments. These are certain types of investments or deposits or membership shares or grants that include monetary or in-kind donations. And then community development services. They're usually related to the provision of financial services or the bank's overall expertise in banking roles. So if somebody needs assistance from the operational sides of a bank, such as with IT, that may be considered for the community development services if they provide that to LMI persons or geographies. The community development activities must benefit the bank's assessment area, or they have to satisfactorily meet it in their assessment area, and then also for a broader geography, either statewide or regional, that includes the bank's overall assessment area. Now, the one thing that I should note is there is nothing that is required from the regulators that a bank have a certain number of community development activities, a particular amount of dollars devoted to it, or a mix of activities that the bank undertakes. That has to be a responsive part on the bank of addressing that performance context that we talked about earlier. So the bank has to be responsive to the needs of the community, and then there's consideration given on their being innovative or flexible in terms of how the bank delivers those. Next slide. The CRA evaluation frequency is based upon performance, and it typically is shown by the size of the bank's assets. And so this slide shows that a small bank is usually between 2 years to possibly up to 4. The intermediate, up to 6. The intermediate small banks is usually over 36 months. The large banks, 36 months. Now, this may change depending on what the rating was for the individual bank. If it is less than satisfactory, they may be more frequently. Next slide. CRA ratings are actually given in terms of a narrative, and they are broken out as outstanding, satisfactory, needs to improve, substantially non-compliance. While the actual exam does do some numerical scoring, the overall rating is going to be under one of these 4. Next slide. There's something that is unique in terms of the CRA exam. It is a specialty exam to begin with, but the other thing is there are certain things that are made public that typically aren't made public from what a bank regulator does. Typically, the examination materials are private between the regulator and the institution, but under CRA, there are certain elements that are actually made public. The first thing is the CRA exam schedule by each of the regulators is made available, so the public gets an opportunity to see when they're being conducted. So, for example, when we mention about the community contacts, that may be an opportunity for the community group to actually do outreach ahead of the exam, to actually say what their comments are. The CRA performance evaluation. Now, this is a performance evaluation. It's not that performance context that we mentioned earlier that the regulators do. This is actually the report of the exam. And so this is made public. So it's available at any time for any member of the public to actually request. The CRA public notice is something that has to be displayed by the institution within their branch lobbies. And then the CRA public file, which is a file that's normally maintained in the main office. It sometimes is available online. But it typically includes the most recent report of the of the performance evaluation, the actual assessment area list, and maps that the bank utilizes. So all of that is made available upon request, and the bank has a certain amount of time that they can respond to that, and they're usually there may be, like, if they have to make a copy of it, there may be a slight fee to get that, but often the public evaluation may also be online and can be actually searched from search engines. Next slide. I'm going to conclude with talking about developing effective partnerships. Now, I mentioned about the community context, but here's some other potentials for partnerships with banks. If you're working on things that are related to some of the matters that we've talked about for community lending, community services, or community investments, this is an opportunity to provide documentation to the bank showing how an activity fits the CRA definition of community development. You can also talk to the bank regulators about community needs, your organization's relationship with banking institutions, providing help in finding and research online on information about the banks in your market, and then finally, getting a grasp or an understanding of what CRA is, what it covers, and what may not be relatable in terms of what the bank can actually get the CRA credit for. So that to know the difference between sound business practices and then also those things that might relate to those community development definitions are things that are brought to greater understanding by you understanding the Community Reinvestment Act itself. Now I believe I'm turning it over to Nanette.
Thank you, Tom. I'll provide a transition. Those of you who may have joined after the start of this webinar, welcome. We appreciate the interest on this topic of disability-inclusive community development. Tom, thank you for laying out for many on this webinar across the country and the disability community. The acronym CRA is a foreign term, and Community Reinvestment Act is something new to grapple with, to learn about, but tremendously appreciate the overview and orientation to Community Reinvestment Act. And now I'm going to turn to Nanette Goodman, Director of Research for the National Disability Institute, to bring this into a focus of the relationship of low and moderate income populations and neighborhoods to low and moderate income people with disabilities. Where is the intersection? How do these pieces come together? Let me turn it over to Nanette.
Hi, next slide, please. So Tom talked about the CRA in general, and I'm going to talk about the empirical evidence that supports the need for the CRA to more intentionally address the needs of people with disabilities. First, the population is a significant size, somewhere in the 40 to 57 million people range, and with over 22 million of them of working age, and 1 in 4 families has a family member with a disability. And more importantly, for what we're talking about today, they're disproportionately LMI. And remember, the intent of the CRA is to make sure that banks serve LMI individuals and families in LMI neighborhoods. People with disabilities are twice as likely to live in poverty as those without disabilities. While other populations have seen a reduction in poverty over the last 5 years, the rate for people with disabilities has remained stubbornly unchanged. What we see is that while many people move in and out of poverty, people with disabilities are more likely to be in long-term poverty. In fact, almost 40% of all people in long-term poverty have a disability. Next slide, please. And banks don't seem to be meeting their needs right now. This chart shows the disparity in the percentage of people who are unbanked, meaning they have no bank account at all. The bottom line shows the rate among households without disabilities. There has been a slow but steady decrease in unbanked rates between 2011 and 2017. Now fewer than 6% of households without disabilities are unbanked. But the top line shows the unbanked rate for people with disabilities. It's fluctuated a little bit, but really hasn't changed much since 2011. 18% of people with disabilities, 3 times the rate of those without disabilities, are unbanked, meaning that together the disability gap, the gap between people with and without disabilities, is actually larger than it was in 2011. Next slide. And even among those who use a bank account, people with disabilities don't tend to take full advantage of what the bank has to offer. Only 57% have a checking and a savings account versus 80% of those without a disability. That means they're likely to have either a checking or a savings account, but not both. And there are red flags ahead. People with disabilities are less likely to use online banking and more likely to use in-person banking, making us worry about what happens when the banks go to more online banking options. Next slide, please. And what this leads to is a potentially expensive use of alternative financial services. 1/3 of people with disabilities either use transaction alternative financial services, such as check cashing or money orders, or credit AFS, such as pawn shops, payday loans, or rent-to-own services. And this is substantially higher than those without disabilities. Next slide. So this all leads to financial stress. People with disabilities are 3 times more likely than others to have extreme difficulty paying bills. They're more likely to report that they could not come up with $2,000 if an unexpected need arose. And let me say, this isn't, do you have $2,000 of liquid assets? It's, can you come up with it in any way? And 55% said no. And people with disabilities, even when they have a mortgage, are more likely to be late on the mortgage payments. Even when they have checking accounts, they're more likely to overdraw them and more likely to take loans from their retirement accounts, really showing what the impact of financial vulnerability is. And these numbers are even more dramatic when we look at people who are marginalized in multiple ways, such as people of color with disabilities. And the impact of financial stress is dramatic. Almost half of people with disabilities skip medical treatment because of costs. And research has found that financial stress impacts physical and mental health, and more than 1/5 report that they have an unmet need for credit. And I love this painting by Sherwin Long, an artist with a disability, called Peace of Mind, that shows a head made of puzzle pieces with some pieces melting away from the face, making me think of the challenge of managing a disability and the extra cost of disability for those who are living on the edge, while at the same time, many of whom are navigating a complex public benefit system. Next slide. So Tom talked about the CRA requiring banks to meet the needs of LMI communities in their footprint through lending, service, and investment, and that LMI is determined by Census Tract. So we looked at how those LMI Census Tracts align with the prevalence of disability. And what we find, and in some ways this is not surprising since people with disabilities tend to be low income, they're clustered in LMI neighborhoods. The map on the left side of your screen shows LMI Census Tracts in Chicago using data from the Federal Financial Institutions Examination Council, the FFIEC. And they actually have a very nice website if you want to use it. The dark red is low income, the lighter red is moderate income. On the right side of the map, on the right side is a map of the percentage of the population in each census tract that has a disability. This is data from the American Community Survey, and also available online. The darker the area, the higher the prevalence of disability. So in Chicago, LMI neighborhoods are spread throughout the city, but on the south side and the west side, there are more LMI neighborhoods and more disability. On the east side, that sort of northeast corner, Edgewater, if you know Chicago, Edgewater, Uptown, Rogers Park, not LMI, very low prevalence of disability. Next slide. I think we probably have some folks here from the District of Columbia, so this map may look familiar to you. Me too. again, not surprisingly, in wards 7 and 8, east of the Anacostia, we have many LMI census tracts and a high prevalence of disability. And we've looked at this relationship in over a dozen cities so far, and we found the same relationship. It's sort of like we're looking at the same maps when we're looking at disability and LMI neighborhoods.
Thank you, Nanette. It's really, when you see the visual presentation, we can look at numbers, we can look at charts, looking at the poverty rate, looking at the statistics you shared about the unbanked population, numbers not really changing very much for people with disabilities over a period now of about 6 years. But when you look at these pictures, you begin to understand this context of where people with disabilities certainly should be a part of the discussion and certainly should be a part of activity, as Tom laid out in the first portion of this webinar, for CRA focus. So it is with both of these first two presentations that I want to now bring to you our third presenter, Mark Reichert, who is with the National Disability Institute and will be directing this new Center for Disability Inclusive Community Development. Mark is going to share with you an orientation to the new center and our aspirations in terms of some of its future activities. So let me turn it over to Mark.
Thanks so much, Michael, and thanks everyone for spending an afternoon talking about these issues. Just a real brief bio for me. I've been blind all my life, spent the last 25 years working for organizations of and for people with disabilities, and what a pleasure it is now over these last, 6 or 7 months to join this team and to work on these issues that, quite frankly, are largely overlooked in so many ways by our disability community as well. Sometimes we get down in the weeds and worry about those important programs which do need attention, but these global issues of poverty absolutely need to be addressed. I want to make sure that I'm calibrated with my colleagues here. We should be on slide 28 on introducing the center, and I just want to say this. Perhaps this is an obvious point, but I want to make sure that we're all on that page together, which is the goal of this center. What are we really talking about? Sometimes we can get lost in the shuffle on all of these terms of art, like Community Reinvestment Act and other things. The real goal of this center is to improve the nationwide well-being, financial well-being of low and moderate income or LMI persons with disabilities and their families. And what an incredible important goal. I think as we get into sort of more of the details of what the center that we've developed is going to do, let's all remember that that is really the goal. With that, next slide, having to do with the purposes of the center. It's really a sort of a twofold purpose, really. The first is to raise broad awareness within the disability community about the opportunities for capacity building available through investment lending and service offered by banking institutions as part of their CRA obligations. And this is one of those things where what this is really about is making sure that our community is aware of these tremendous opportunities. And they're based in law and regs. They are part of our system, and indeed in these days where public support for the work that is so critical that so many folks on this call do every day, as that public support is harder and harder to come by and in many cases is under threat, to find a way in which we can work collaboratively with the private sector and specifically our colleagues in the banking world is so critical. And the second part of the purpose is to foster greater connectivity between the financial services sector and the disability consumer and service provider communities well suited to collaborate on CRA-related activities and inclusive community development. Our center, if we're doing our jobs right, is all about not only making sure that our community is aware of the needs, or aware of the opportunities, but then to say, you don't have to try to navigate this, what I'm sure for many people is a brand new area. You don't have to do it alone. And that's a key purpose for our center. Next slide, please, having to do with outcomes. Let's see. There are a number of outcomes, really. I think we have 3 of them up there. The first having to do with community-based disability service organizations will have, if we're doing our jobs right, will gain a better understanding of the investment, lending, and service opportunities open to them as they consider how to best fashion CRA qualifying community development activities that meet the unique needs of the populations that they're serving. Tom brought this up in his presentation, that indeed the way that CRA is structured now, it is very much oriented toward meeting the unique needs of low and moderate income individuals and neighborhoods, geographic, essentially the footprint of a bank, their service area. The community-based organizations on this call are right there, literally on the front lines. There's no one who's better expert at knowing what the low and moderate income needs of folks with disabilities are than you. And so one of the outcomes that we need to make sure that we're addressing is that you all have the best information that you can have to work in partnership with banks to make proposals to them and to suggest partnerships that will be the most successful as you pitch them. Another outcome, financial institutions will be better equipped to recognize and evaluate disability-related community development proposals as CRA qualifying projects and activities. I think this is something, and Michael, I hope you don't mind me saying this, but I've done disability-related work for a very, very long time, as you have and so many others have, and we visit with regulators and others all the time. And some people can, frankly, they've heard the issues over and over again. They don't necessarily seem all that they're committed, but they've heard the issues over and over again. It continues to strike me over these last few months, beginning here at NDI, how enthusiastic our colleagues in the banking world are, and we'll get to federal regulators in a second, about trying to work much more effectively with this community. I think people, it's a light bulb moment for them as we've worked with financial institutions who say, well, of course people with disabilities are in this low and moderate income category, and of course we should be serving them, and thank you for connecting those dots. And then finally, as an outcome, federal regulators will be better prepared to evaluate financial institutions' CRA performance in a way that is truly disability inclusive. I think that point speaks for itself. All right, next slide on audiences to be served. We were putting these slides together with the audiences, constituents. These are groups that we are intentionally targeting with the work of the center, who we are actively wanting to be at the table and involved, but we are also, it's our intention to be providing a service directly to these groups, and in varying ways. So who are they? We didn't rank, there are 5 of them we listed. We didn't necessarily rank these in rank order, but perhaps the first among equals for obvious reasons would be LMI persons with disabilities themselves. So in terms of the audiences, what are we doing? Access to mainstream financial services that will allow individuals to improve financial stability and mobility will be enhanced by the center's activities. Just listening, Nanette, you and I have talked so many times about the data, and I don't know anybody who does it better in terms of painting that picture. And Michael, believe me, you don't have to see the graphics up there to be frightened by the numbers. They should be burned into everyone's brains like letters of fire or numbers of fire, and they truly are. The notion that things are as stark as they are, shame on us if we don't find every opportunity to alert people to exactly the significance of the profundity, if I can put it that way, of the need. Second, audience and constituency that we will be involving and will be serving has to do our friends in the financial services sector, particularly banks. The center will increase access to a growing market share that is more likely to be unbanked or underbanked or does not have access to a savings account. So I just want to pause there before I read the rest of this and say, this is good for business. We are obviously trying to build partnerships, and I know our colleagues and friends in the banking world want to do the right thing, but this is also most assuredly good for business. It is an expanded market share. So the center will, technical assistance will be provided or made available to support financial institutions in identifying and developing their performance context, and Tom explained to you what that is, term of art, what that term of art means, in primary assessment areas and connections to nonprofits that support LMI persons with disabilities and their families. We want to make sure those of you who are financial institutions, banks represented on today's call, and those of you who are community service folk providing services, that you know who each other are, and if you're looking for ways in which you can all communicate better, we want to make that happen. All right, next slide having to do with audiences, please. I think that's where we're at. Yes. So the next one, community-based organizations serving people with disabilities and their families. This is an obvious group that it will be a group of folk and organizations we'll be working with. Technical assistance from the center will result in support of CRA projects that increase funding and capacity to build the financial well-being of low and moderate income persons with disabilities and their families. Janet will be speaking next, and I'm going to just take one line from her playbook, which is to say, we're not about trying to, the message you're not hearing from us is, how in the world can we get our hands on that CRA money? What this is really about is finding a way in which people and organizations in the disability community can be as aware and appropriately prepared to discuss with banks the possibility of partnering together, not just on supporting specific projects or grants, but also that those in-kind services and other partnerships that are possible. And I know Janet's got a whole presentation on that, so I'll just leave that for her. Next audience, the fourth that we've listed, community-based organizations serving LMI populations generally. You might say, well, gee, thanks, Mark, you just said that in the previous one. What we have in mind here are community-based organizations that are doing all kinds of wonderful things, but frankly aren't, maybe they don't have a specific mission to serve people with disabilities. It's not in their name. It's not, and quite frankly, as someone who has had a disability lifelong, I could name you, and I won't, organizations that are community-based organizations serving perhaps low and moderate income folk who are neither physically nor programmatically accessible, or nor actually develop programs that meet the specific needs of various populations of people with disabilities. So, what will the center do? Technical assistance from the center will support community-based organizations serving LMI populations generally to expand their programs to include persons with disabilities and their families, for sure. It's all about inclusion. Amen. All right, and the fifth population that we've singled out, of course, as being part of the groups that individuals that we will be working with are federal regulators. They're absolutely a critical part of our audiences. So, federal regulators of financial institutions, we will offer guidance to them about inclusive community development and data identifying LMI persons with disabilities in neighborhoods to assist financial institutions in meeting their CRA obligations. Nanette made a compelling presentation to us, and it's going to be presentations like that and mining the various data sets that she knows how to do so well that I think will be of tremendous value to banks in meeting their needs. Next slide, please, on phase one of the project. So what are we going to do when we're rolling up the sleeves? It's really, in phase one, we sort of think of this in the first 6 months phase of the center plan. and it will provide both the disability and banking communities with new access to training and resources that hopefully will accelerate the support of inclusive community development activities across the board. We really want to start to see, and again, Janet will talk about examples of how this is being done, but there is such an untapped reservoir here of possibilities to work in partnership, and we really want to see that happen. So we're launching that right now. This inaugural webinar itself is actually the first in a series over the next 6 months. And really what we're doing, guys, you're I don't want to call you guinea pigs, but we are definitely, this is a pilot test. We're reaching out, bringing these groups together, and over the course of the next 6 months through webinars like these and other materials that we'll be putting out, we will be evaluating the effectiveness, and of course we want to hear from you. How did we put the information down where you can get it? For sure, be in touch with us about that, because we want to evaluate that as we move forward, particularly in the activities talked about in slide 34 in the first first year or so of our work. So there's really 5 activities that we're going to be doing here. We're going to establish the center website with core information and educational material.
Next slide, please.
Oh, sorry. Got it? Are we there? Fantastic. So establish a website. We've already started to do that, but we want to make that to be a robust one-stop online shop, if you will, for all of those constituencies that we described, to hopefully put in your hands information that is as practical as possible to make this dream of trying to make the CRA as relevant and inclusive for people with disabilities as possible. Next activity is to design and test an inaugural training program, a fairly involved training program for the disability and financial communities, for sure. Yep, you bet. Lots of training material to come. Identify the gaps and develop tools that support financial institutions in identifying the needs of the targeted local disability communities. This is an important point, because we are identifying it. This isn't just a one-way system that we're setting up here. This isn't all about us talking to you. We wanted to learn about where the gaps are from all of our constituencies, but I'm right now winking at the folks in the financial services world and our bank friends to say, tell us where the gaps are. How can we know how to run the data probably better than just about anybody, if I can brag on my colleagues here. How can we make sure that we're helping you achieve the goals that you know you have and want to reach? Next activity, gather and collect LMI disability data that financial institutions can access at the local level to provide the tools to measure meaningful impact for their inclusive investments, lending, and services. It seems like that speaks for itself. Same kind of thing. We want to be a resource, and this center will be a source for reliable data as banks do what they need to do, and document and disseminate CRA best practice examples, including but not limited to a host of stuff that are listed on this site, on this slide, and I know Janet will be highlighting a number of examples. In so many ways, the skies are the limit in terms of the kind of work that can be done in partnership under the CRA model. Let me move then to, if I can, the next slide. Technology, don't fail me now. And this is on the advisory committee. Just really briefly, who are we going to turn to be our sort of compass to help us find our true north? We have already begun to form an advisory or work group to help us to keep and guide the future work of the center. So pleased that our board chair, NDI board chair Janet Hamer, has agreed to co-chair this work group, along with Tom Stokes, who you've met them both earlier in this webinar, and I think their information is up on our slide there. In addition to Tom and Janet co-chairing this work group, which we hope, I think, will be launched. I think our first meeting's in September, and hopefully we'll be doing that on a bi-monthly basis thereafter, or as needed. We'll have others, of course, joining them, certainly representatives from the financial services sector in a bunch of ways, banks of varying sizes representing different geographic areas, et cetera, and obviously leaders from across the disability community, because there's nothing about us without us, right? Right. And certainly, if you, did I mention that we're also going to be, no, I didn't. We're certainly going to be including representatives from the 3 regulatory bodies that Tom described in this work with the advisory committee. And if you, whoever you are interested in being a part of this advisory work with us in this work group capacity, we would love to hear from you. And I believe we've posted the email address for our colleague Hope Price, hprice@ndi-inc.org, and reach out to her if you'd like to express interest in working with us. With that, Michael, I think back over to you.
Well, thanks, Mark. I think you've laid out a pretty ambitious agenda and schedule of activities over the next 6 months and into next year. It is, as you described, all about building a bridge and a new level of partnership, new level of understanding that is very empirically based, data-driven, that we have begun to uniquely prepare that will be of great advantage to banks as they explore unmet needs in their physical footprint. And I think that this center will be quite unique in both helping bring the disability and banking community together for CRA-related activities, but it will also be about creating that roadmap ahead based on often examples we are going to identify out in the field, and those of you on the phone are going to help identify. Partnerships already exist. We want to learn more about them. We want to really highlight them for other communities to look at. And we want to continue to build out the possibilities of inclusive community development. So I will turn next to Janet Hamer, who, as I mentioned at the beginning of this webinar, former Senior Regional Community Development Manager at the Federal Reserve Bank of Atlanta, 14 years specializing in small business and microfinance lending and access to banking and financial stability for low moderate income individuals and communities. Janet, we are fortunate not only from that professional experience, but also currently serves as the chair of the NDI, National Disability Institute Board of Directors. Janet, I'm going to turn over to you to share some of your insights and some examples of inclusive community development. Janet?
Thank you so much, Michael. I really appreciate the opportunity. And I want to say I've been on the NDI board for the past 5 years. I've been associated with and following NDI since its inception. And just this year became the board chair, and it really honored to be part of the National Disability Institute family. And also, I'm so excited about this new center and the possibilities of where we will be going with this. Next slide, please. So very briefly, because I want us to have an opportunity to do questions and answers and get some questions from our participants, I want to just give you a taste of some of the best practices of partnerships between financial institutions and organizations that serve persons with disabilities and also persons with disabilities. One of the things that we will be doing with our webinar series is that we'll have webinars on best practices, and we will actually have the organizations that are partnering together with the financial institutions to talk about what they're doing, because there are some incredible best practices across the country and incredible partnerships going on. So the first one I want to talk about is the Bank of America program that's it's Sign On to Financial Empowerment, supporting the deaf and hard of hearing community. And basically, it's boosting the financial empowerment in the deaf community through a combination of educational workshops, training, and ASL videos. The videos are based on the Bank of America financial education, better money habit topics. There are lots of educational workshops, and importantly, and this is one of the best practices that we want to highlight, Bank of America is increasing awareness among their staff, and particularly their frontline staff, to further communication with access to financial services to serve deaf customers more effectively. And this is a best practice that has been going on. Some of you are probably familiar with the Bank On programs across the country. Many of the Bank On programs have as part of their training, training for frontline staff in financial institutions, tellers, customer service folks, to understand better how to deal with the needs of the disabilities community. Right now, there are 3 locations for this program, Austin, Texas, Salt Lake City, Utah, and the state of Maryland. And also part of this program is training bank staff to be able to disseminate information to their customers with disabilities on the ABLE Act, which is incredibly important. Next slide, please. So the next best practice I want to highlight is the JP Morgan Chase sponsored Financial Inclusion Summit that took place last year in Houston and brought together policymakers, stakeholders, persons with disabilities, organizations that serve persons with disabilities, the city of Houston Mayor's Office for People with Disabilities, NDI, FDIC, and basically it was a summit to talk about inclusion and access to mainstream financial services, which this is a best practice that is going on in other areas too, but is critically important to bring together those financial institutions and organizations to establish those partnerships and really to raise awareness of what kinds of best practices that can be started. Next slide, please. So the next best practice was funded by City Community Development. It's Empowered New York City, financial empowerment program for people with disabilities and their families. To date, 280 clients have been served with one-on-one meetings with certified financial counselors. These financial counselors are being provided capacity building and TA by NDI. They're also, it's free, high-quality, confidential service. It covers a broad range of financial issues, and it's customized to individuals with disabilities and their families, integrating critical information about disability benefits. And right now, it's serving in the 5 boroughs of New York City at various community-based organizations throughout those communities. This program has been able to provide technical assistance to Bank On programs in other parts of the country. And it's also provided technical assistance to other cities. And if you're interested in more information, you can go to the website, which is empoweredcities.com, and take a look at this program. So the last best practice, next slide, please, that I want to highlight is something that I think is really important, and we'll be talking about this a lot in the next few months because lending is critical. Lending and bank services that are tailored to persons with disabilities are really critical. We heard from Nanette who told us that 18% of persons with disabilities are unbanked, which is a staggering statistic, right? Because in the total in terms of the population of unbanked is what, 5 or 6%. So and most of those individuals, a great number of those individuals are LMI. And not only are they unbanked, but they are probably, for the most part, availing themselves of alternative financial services, the payday lenders, the pawn shops, all the kinds of somewhat predatory practices that we want to be able to get people to no longer use. So this program is part of the NDI's Assistive Technology Loan Fund, and in the state of New York, Spring Bank is providing it's issuing and servicing loans for the Assistive Technology Loan Fund. These are the kinds of programs that and services that banks can think about providing to persons with disabilities. Things like small business lending, entrepreneurship loans to persons with disabilities that would like to start a small business, specific kinds of accounts for persons with disabilities. There's all kinds of lending opportunities that will help us with partnerships between persons with disabilities and financial institutions. So this is a really good program. And that is, I think my time is up, so we'll have some time for questions and discussion. Again, this is just a sample of some best practices. We're going to be able to provide you with a lot more information and contacts for best practices across the country that will really help inform both for financial institutions and their community-based partners of how they can work together for persons with disabilities' financial needs. Thank you.
Thank you, Janet. Some great examples. As you said, there are many others. The center is going to collect with people's help across the country, both from financial institutions and the disability community. We'll be writing them up and identifying critical ways partnerships were formed, critical impact on low moderate income people with and without disabilities in the footprint of financial institutions. So let me go to questions. I appreciate a good number have come in from the audience, and I have some that were pre-prepared. I'm going to go first to you, Tom, and I'm going to mix from the audience as well as some of the pre-prepared questions. So the first question, Tom, is what role do you have at the FDIC? And I'm going to add to that a question that came in from the audience. What steps is the FDIC taking to get more public participation in the CRA exam process? So maybe you can take both on. Tom?
All right. Let me first start with the role, and I'll give an overall scope and come back to my position. Community development within the FDIC consists of 6 regional configured offices, as well as a headquarter office in Washington, where the staff is actually dedicated to promoting economic inclusion, public confidence, and financial stability for low and moderate income communities and individuals. We do that by doing outreach, which can include something like a presentation that I'm doing today. It may be a convening of either community groups and or banks. We may do them separately on topics that range across various economic issues. The other thing is we also do a considerable amount of pilot initiatives of products and services, anywhere from safe, affordable accounts for people to open up, small dollar lending, youth pilot banking in terms of those opening non-custodial accounts before they reach the age of majority. And so we do that in order to provide examples of how things can be done that can be adapted by the industry. And then finally, we do a significant amount around the trainers on financial education so that groups can be versed in how to deliver financial topics to their clientele. So that gives you the scope of what we do in the community development arena. My particular role as a regional manager is to look over a set group of states. So I have 7 states in the Southeast that I'm responsible for looking at in terms of providing that service delivery both to community groups but also to the industry, providing technical assistance and support to both. So the steps that we're taking to kind of work with more public involvement with CRA, I would say that we have been one of the ones that have been leading the effort to actually provide more training directly to community-based organizations on what CRA is so that they have an understanding of the distinction between the banks that they can go to for large grants and investments and those banks who are more interested in getting the lending involvement because that is where they're going to get the emphasis in terms of the CRA credit opportunities. And so we've tried to provide that opportunity where groups actually are getting an overview of CRA like is taking place on the webinar today, but also so that they can also network with banking institutions so that they get a perspective from them as well as to what they are looking to do. I hope I've addressed both of those.
Great, thanks, Tom. I think you have.
Sure.
I'm going to go next to Janet. And our pre-prepared question was, what role did you play at the Atlanta Fed? But I'm going to add to it one that came from the audience, which is the question of how does one look up assessment areas for banks? Where does one go for that information to be more involved in the examination process and community participation process?
So I'll start with that one. There is a website, I think that Nanette talked about, the FFIEC website, which will provide information on all financial institutions, including their assessment areas, and that really is important. So I think Tom talked about that, but in terms of assessment areas are defined as geographies where a financial institution has a presence, a retail presence. And that's one of the things that, when we're going to do more of these webinars and really get into some of kind of more details about best practices and encouraging, one of the things is linkages. So we want to encourage community-based organizations that are working with LMI communities and persons with disabilities to establish those partnerships, those linkages with financial institutions that serve their communities. And financial institutions, we also want to talk to financial institutions on the flip side about understanding who in their community is serving persons with disabilities, which that may not have been something that they thought about, and we want to be able to help them understand that organizations that serve persons with disabilities are really important to reach out to in terms of community development. One of the things that I was with the Federal Reserve Bank of Atlanta for 14 years in the community development program, but I also have been a community development manager in a large regional bank in the Northeast and in the South. And that was one of the things, as that community development manager, I was constantly looking for community-based nonprofit organizations that I could partner with, that I could start working with in terms of lending, investment, and service. So this is one of the things we want to be that linkage to provide the financial institutions and the nonprofits, kind of marrying that, matching them together so that they can establish those partnerships. Did I answer that question, Michael?
Yes, wonderful. Thank you, Janet. I'm going to go next to Nanette, and a question about, again, I love the visual, and Mark, as a person who's blind, made the good point that you don't need the pictures to get the importance of these issues. But Nanette, can you explain how the data pictures you showed could be used by a bank to target their CRA activities?
What I think it tells a bank is when they're looking at the LMI neighborhoods and their footprints, the percentage of people with disabilities in those footprints, to help to highlight sort of the breadth of need of that population. I think it's a very sharp reminder that if we don't intentionally include this population, we will unintentionally exclude it. And this really tells them exactly how many people they will be unintentionally excluding by not doing disability inclusive community development.
Great, thanks, Nanette. I'm going to go next to Mark. The prepared question was, again, you spoke about some of the priorities for the next 6 months, but and you talked about there's going to be development of new materials and there are webinars. But I think I'm going to tilt this question to the fact that you've worked in the disability community on public policy for more than a dozen years.
25 years.
25 years, okay.
That's where all the gray hair comes from.
How do we get, this is a whole new area for the disability community. How do you think we can get more attention? As you said, we're seeing a lot of sensitivity not just by the large banks, not just by the JP Morgan Chase and Bank of America and Citi and Wells Fargo, but regional and even smaller banks. But how do we elevate this attention of this set of issues in the disability community?
Love the question. Nothing sells like a story. All of the data in the world is amazing, and we have amazing data thanks to the net. And along with that comes, and I'll buy into it. It's, what is it, the picture telling 1,000 words or saying 1,000 words? When you're able to do that with data, it's great. That's why we are making a priority in the center of gathering, I think you called them case studies, these examples of best practices and the kinds of things that Janet was talking about. Essentially putting in front of our community, look, this is not something that's all theoretical. It's not something that's very remote. This is happening right now. And you don't have to believe us. We'll show you. Here are the people who have worked things out. Folks in our community who are folks that we know, who have reached out and actively partnered successfully with banks, and the regulators have acknowledged what the incredible contribution that's been made in specific context, and to tell those stories, to showcase them, along with, of course, the supporting data and the authoritative information. But I think that's what's going to make the biggest difference. And the other thing I would say is, apropos of a comment I made earlier about reaching out to, and I would encourage, I think we all would here at NDI in this new center, our community to actively reach out more, if you haven't already, to the federal regulators and get to know the folks in your local area. What you're going to find, based on my new 7 months worth of experience working here, is that this is a ripe audience of people who want to hear what you have to say, who are astounded by or shocked to maybe see in the proverbial black and white how stark things are, and when you talk LMI, you are talking disability, and then take that next step and say, right, let me introduce myself to you, this is the program I'm doing. Reach out and make those connections, and of course the center is going to be there to help you do that.
Fantastic. Thank you, Mark. I'm going to go to some of the questions, again, mixing from our pre-prepared and questions and some that have come in. I think a great area of questions has come in about the changing, evolving world of banking, moving more away from physical footprint, geographic location, to the digital world and access online and digital products. Here's a pretty good question. How can CRA pay attention to meeting community needs, but through evaluating a bank's digital strategy? And I'm going to try, Tom, I'm going to put you on the spot first. Interesting question. It's not, I know it's very much in public debate right now, but what are some of your thoughts? I know, again, you're not talking necessarily officially by any means.
Right. So I do want to mention that I was on a call earlier today with the group here that's been following the last financial summit that NDI did in Atlanta, and so we've had an ongoing working group. And one of the things we were discussing was some things around technology and accessibility, and so that obviously is an area where I think there could be the adaptation of meeting community needs with that perspective in mind on as banks go to digital, are they in an accessible form for individuals with disabilities? Now, obviously, there's some things that they think about in terms of the location of automated tellers and that sort of thing, but the online perspective and whether or not things are actually completely accessible for people with disabilities, that may be an area that CRA could be adapted to. Now, as you indicated, that this is an ongoing discussion on where they want to go with the CRA perspective as banks go from brick and mortar to more of a technology-based kind of system. But I always think that there's a need for the high-touch sort of perspective as well for those individuals with disabilities because of the fact that they may not have ready access to every other piece of technology that's out there unless it's compliant. So I think it's an area that's ripe for thought and discussion, and it's something that the center probably will be addressing on a regular basis.
Thank you. I'd love to ask others on that, but I want to get more questions in and watching the clock. Very good question came in, actually more than one. Why aren't you talking about credit unions? Are they not going to be a part of your work? And I'll first answer this, but yes, we definitely, in our sense of disability inclusive community development, we will go beyond CRA. But for those new to CRA in our audience today, the Community Reinvestment Act does not apply to credit unions. And they have their own regulatory structure, and they actually do not have a law that is quite the same. But credit unions are different entities completely in terms of they're not-for-profit. They have other, sort of an other framework. But we will, in future webinars, be having presenters that look at inclusive community development because there is a lot of activity going on in the credit union world. So that is simply why today, with our focus on CRA, it has not come up. Another question came in, and that is, what do you suggest for an established community-based partnership that brings together LMI individuals with disabilities? How would you start? Who do you talk to in a local community? It's a very basic, very, very simple, but important question. Where do I go? Who do I talk to? Maybe Janet, you might take that from both your perspectives at the Federal Reserve and then having spent some time working for a bank.
Sure. So I would suggest for a nonprofit that they look around their community and determine which banks are in their community in terms of bricks and mortar to start out with. Because those are probably the banks, even though, we are moving into technology, there is still a lot of individuals, particularly LMI individuals, that want to be part of a bricks and mortar bank. So I would suggest they look around for and identify the financial institutions that are serving their community. And then at that point, talk to the branch manager at that bank and ask the branch manager who they can contact in terms of who their community development person is. And go from there and find out who does their community development work and contact them and start establishing a partnership with an initial meeting and then a discussion of what the nonprofit does, what their needs are, and how they would like to partner with the financial institution, because there are a lot of opportunities, and the banks want to partner. It's very important for them to be engaged in their communities. So they're going to want to establish partnerships, and they're going to appreciate that the nonprofit is reaching out to them.
Great, thank you, Janet. I got another question in again about this changing world of digital banking and technology's role in banking. Question is, under CRA, could a bank help create a town-wide internet access for free or low cost that would allow access to both banking services, information, and even potentially job opportunities for people with disabilities? This seems like it could be a huge need met under CRA. I'm going to go back to you, Tom. I think I know
Sure.
the answer, but Tom, how?
Okay. I think that it dovetails with what I was talking about earlier, where banks can provide a provision of services that relates to their expertise. And so this might be an opportunity as long as there can be some sort of documentation that it is impacting for LMI persons and or geographies when this is done. So this service could be a provision from a financial institution that may be credited depending on how the site is set up and the outcomes of that site. I know that there has been in some of the Midwest states, there's been things that have been set up where banks have had an input in that type of information sharing, and so I suspect if the bank can actually demonstrate the impact for the LMI participants, then it may be considered for it. So it looks like it fits the opportunity for the provision of the services. It now depends on whether or not the primary purpose and the community development purpose is carried out in order for them to get the credit.
Thanks, Tom. Great answer. We've gotten several examples, people looking for, wanting to know, would this be a possible project? And I'm not surprised. We're getting a lot of those. But one that's interesting is one person wondered whether could a state, this is a question about, they want a state park would like to expand its services to be more available to citizens with disabilities. They don't have the money. Could a state partner under CRA? And not only can a state partner under CRA, a city government could partner under CRA. In other words, it does not just be the community not-for-profit. But Janet, you maybe have a further comment on that.
Sure. What I would suggest, and I was reading some of those comments, I would suggest that almost every large financial institution has a foundation which provides grants to organizations, and they all have different primary areas that they focus on. Some banks focus on environmental issues, which something like this would be great. This would be environmental and also would serve LMI persons. So I would suggest that that's the kind of project that you want to get to know your local financial institution and talk to them about that and ask them if you can have a foundation contact. Every bank has every large bank, pretty much every large bank has a foundation, and talk to them about the opportunity for a grant to do a project like this.
Great. I'm going to get one more in before I go to a final question. Question came in about an individual who serves as a representative payee for people with intellectual and developmental disabilities who usually have low income status. They want to know, or maybe have been having difficulty identifying a bank where they could help set up a bank account for that individual, and that they both can share in some way the management of that bank account. I would answer that question by saying, again, similar to what Janet said, there are multiple financial institutions who would certainly be willing to talk to you. Again, it's about getting to know your local financial institutions, present that situation. If you're still being challenged, please come back to me and we'll help put you in touch with a variety of financial institutions with a footprint across the country who I'm sure would be glad to talk to you. So let me get to the final question. We'll have to go very rapidly. In summing up, I want to go through the whole panel, so keep it short. What's the one point you'd like to share with our very diverse audience, which very gratifying? People joined us from all across the country. What do you think of the one point you'd like to make that we all move forward in an accelerated way to create disability inclusive community development? And Nanette, I'm going to go to you first.
That's a lot of pressure. So this is such an untapped opportunity to bring disability into the community development discussion, and I look forward to the opportunity to use data to move the needle forward on that. Okay.
Data-driven, lots of partnerships, but we can provide the evidence. Great. Let me go to Tom. What's your closing thought?
To raise the engagement level, the excitement level for peer-to-peer discussion, not only in terms of individuals with disabilities, but also amongst the advocacy organizations. Fantastic.
Thank you. Janet?
I would say that the word of the day is partnerships, that this is an incredible opportunity for organizations that serve persons with disabilities, for persons with disabilities, financial institutions, to establish partnerships. And I will tell you that financial institutions want to do this, and they don't necessarily know who to partner with, and this is an opportunity for all of us to work together.
Fantastic. Mark?
As somebody who has done the public policy game for more than a quarter century, watching the federal government shut down multiple times for bizarre and ridiculous reasons, seeing more and more pressure on public sources, certainly at the state level, boy, oh boy, what an opportunity there is to turn to an untapped possible set of partnerships and relationships that could really be of direct benefit to our community in a brand new, renewed sort of way that frankly will allow us to maybe put more smiles on our faces than some of us maybe have been seeing here of late, especially if you've watched the news, Lord knows.
Thank you. Final slide. Somehow we have gone through an entire hour and a half. I thank all of you for joining us. I urge you to be on the lookout for, there will be, over the next several months, additional webinars towards the end of the month on such covered areas as CRA coverage of workforce development, CRA support of housing, CRA support of financial literacy and financial counseling. We will, as I said, also have discussions with credit unions. We'll have additional best practice examples for you. And what really this is today, one day before the 29th anniversary of the signing of the Americans with Disabilities Act, this is the beginning of a new day of opportunity, of, as I think each of our presenters has said, of partnership and collaboration, a recognition that there are far too many people in low, moderate income status who are people with disabilities, both in the footprint of banks, in virtually every community in the country, both urban, rural, and suburban footprint. It's time we can do better. We hope that the Center for Disability Inclusive Community Development, we ask any of you on this call to reach out to us with your ideas for how we can accelerate the opportunity for this type of inclusive community development activity in your community, whether you're a financial institution, a regulator, whether you're part of the disability community, a community organization, a city, a state government. We are eager to hear from you. I think this is a great beginning. Thank you for joining us. Thank you, panelists, for your insights and perspective. And we look forward to hopefully so many of you joining us next month. Next month, we're going to have as a key speaker Dory Rand from the Woodstock Institute in Chicago, who will share her perspectives on really how does a community engage? How can community groups and low, moderate income populations in communities become a part of the CRA picture, working together with banks, being a part of the performance context and performance evaluation. So we look forward to you coming back next month with Dory and joining us in future events and activities of the center. So thank you all, and we look forward to additional wonderful work together. Take care. Bye-bye.